This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. And it's a rainy Tuesday morning, at least here in Bombay. But I guess it's raining bulls as well on Dalal Street. I'm Prashant, with me, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, good morning. But it's shining bright on Dalal Street, right? I mean, it's, the sun is out. The only thing is, after so many days of gains, I guess some consolidation perhaps could be the order of the day.
Well, I don't know if bulls will agree, right? They want to go
all out.
Just absolutely, right? Yeah. But actually, the market re-accelerated yesterday. I mean, there was, as we were pointing out yesterday morning, last week was mostly sideways. Friday, the market broke out. And yesterday, it picked up steam even more. Actually, in the last 30 minutes for the Nifty and the last 1 hour for the Bank Nifty, I mean, both indices saw sharp re-acceleration, and that's a change. 0.75% higher on the Nifty 50. So this is quite something, which also now means that the Nifty is broken out of this small kind of recent consolidation zone. It's kind of decisively broken out with yesterday's closing that we saw. The global backdrop, I mean, I kind of discussed this extensively yesterday. It remains supportive. And it's changed. It's changed in a much more favorable way over the last 5 or 6 days. And last night, there were no indications that, I mean, there is any setback to that, which basically means that the hopes of soft landing in the US is basically the primary driver out there. The NASDAQ outperformance in that light continues. I mean, that index was up almost 1%. The S&P was up as well, but I mean, to a lesser degree. But the Russell 2000, for example, is not just the large cap tech which is rallying. The small cap tech is rallying as well, and we can go into details later. Russell 2000 small cap index, which is a much larger index, that is rallying as well, which was up about 1%. Dollar, US yields, both were well behaved. The dollar index remains under the 100 level, which gets us to the market here, the levels you need to watch out for. You know, yesterday we put out the first level on the Nifty, which will be in focus. At yesterday's close, we were 20 points short of that. We put out a level of 19,740. We left off at 19,710. I mean, I didn't think we'll get to that in one day, but that's the kind of market we are in. In the near term, 19,818 will be the upside level to watch. That is nothing but the upper Bollinger Band, which has also moved up because the averages are moving up. So the band also moves up a little bit. So we are at, that now stands at 19,818. That's the immediate kind of target to work with. On the way down, support will come in at roughly around the 19,500 levels. Again, that's 200 points out from here, but that's the closest. That's the 40-hour exponential moving average. That's the closest I could kind of find with the kind of pace that the market is putting on. Bank Nifty will eye the previous peak, and this is the same level we put out yesterday, which is 45,655. We left off at 45,450. Banks also participated in a very handsome way after Friday's reversal higher that we kind of alluded to. On the way down, the swing low of 45,547 will be the number to work with. So that's the level for the Nifty Bank. Small caps and mid caps, they continue to see pretty robust action. I mean, actually, it was not so much mid caps, but it was small caps. The index, the small cap index, is now just about 5% away from its all-time high level. Remember, those indices are still lagging, but they're also coming up pretty fast to the previous highs that we saw there. I mean, the GIFT Nifty is indicating a flattish start, but that's just the start, and we'll pick up from where that is at as we begin another session. Sonia.
Oh, absolutely. And, the strategy is pretty clear, right? All you got to do is just stay with the trend, and you're kind of making money all the way. And the trend is on the upside. The momentum is intact. In fact, we hit record highs for a second straight day yesterday. And now the Nifty is just 280 points away from the 20,000 milestone. So just a matter of time before the 20,000 milestone gets hit on the Nifty. If you look at individual sectors as well, a lot of the laggards are coming back in a big way. Yesterday, for the third straight day, the Nifty IT index was at a 52-week high and gaining ground as well. So banks, IT, all are performing. And of course, you have big numbers this week as well, the likes of Reliance, ICICI Bank. So you'll get some more participation perhaps towards the end of the week. The only thing is that flows have thinned out a tad bit. So yesterday, There was buying both from FIs and DIIs, but barely any amount, about 75 crores of buying from FIs, 65 crores from DIIs. But I'm watching out for what's happening in the US markets because it's been a sixth straight day running of the Dow in the green. Of course, we all know that there are now possibilities of perhaps a rate cutting cycle beginning as well, although there's no confirmation of that, but that seems to be the rising narrative with the way inflation is cooling off. It's an important week of results in the US. You have Netflix, Tesla, Morgan Stanley that will be reporting numbers. And later today, you have the June retail sales in the US that will come through. That will give you a sense of how consumer health is doing. So lots to watch out for. In results in our own markets, there's IndusInd Bank, there's Polycab, which has been a big gainer. We've been talking about that ad nauseum. ICICI Pru, L&T Tech will be reporting numbers as well. And through the course of the week, tomorrow, there's HUL, Infosys, then Reliance and ICICI Bank. So plenty to talk about. But I think staying with the trend is something that has worked in favor of the bulls. And I think even if there is a little bit of consolidation today, just keep it on the upside and keep it with the trend. I guess that should work.
Absolutely, Sonia. The trend is on the upside, so you don't want to fight the trend, right? Yeah. And the Nifty's continue its march towards the 20,000 odd mark. In yesterday's trading session, the first half of trade, well, it belonged to Reliance Industries. And towards the end, the Nifty Bank, that saw a big surge in trade, and that too backed by big open interest build-up as well. So the long addition in the Nifty Bank, that's what held the Nifty in good stead as well. The near-term support on the Nifty, well, that moves up to around 19,500 odd, going by the options data, which we'll get to in just a bit. What are the FIs doing in the F&O market? Well, the Qs coming in are very, very bullish. Yesterday, the gross buy number was a little bit lower, but otherwise, the Qs in the F&O market, well, they're bullish. They added close to around 4,500 long contracts. That's close to around 2 longs for every 1 short position. And the long positioning now stands at around 70%. The net long position has not yet hit that 1 lakh contract mark, which makes me a little bit cautious. So we're still a few thousand contracts away from that mark. On the index options side, they bought more puts than calls. But what's encouraging is the way they're writing puts. And yesterday as well, we saw a very, very aggressive writing on the put side, which brings us to the 2 most active strikes that I'm looking at today. On the Nifty, the 19,600 put, well, that was very active. In a single trading session, it added more than 1 crore shares. So aggressive writing is what we saw at them. And since it's Nifty Financial Services Index expiry, well, we'll keep an eye out on that. The 20,200 put as well, that was very active in trade. Yes, the trend is up. Yes, everything is looking good. But just a couple of words of caution won't hurt anyone, right? So just 2 points I want to pull up. One is the Nifty ended higher. Maybe the India VIX, from, very, very low levels, it's seeing a bit of a bounce. But that's normally not what happens when the markets move up. So that's point number 1. Second factor is the PCR. It's moved back to around 1.55 odd. Remember the last time it went to around 1.6. We saw a pullback of around 100 points or thereabouts. So just keep an eye out on both these 2 Qs as well. And putting some caution on the table won't hurt anyone. Support levels you're looking at, you need to stay long on the index. But going by the options data, on the Nifty Financial Services Index, you have both those 2 support levels. For starters, the implied start is a gain of around 40 points. Need to stay long on the index and trail your stop losses. Prashant.
Right. Absolutely. I mean, stay with the trend, and I think that makes absolute sense. Well, on equities, here are some views which are coming in. Pankaj Chachoria of Antique Stockbroking says, Indian equities continue to create new lifetime highs supported by strong FPI equity flows. He says US bond yields cooled off by 20 basis points as consensus is building for a lower US Fed rate by 2024 end, given better than expected June US CPI and core CPI readings. He says in terms of corporate results, so far IT companies are seeing weakness in discretionary spending with a focus on better ROI and cost optimization projects. However, he adds, domestic demand momentum continues, as is visible in banks, cement and real estate. He says that the market return appears to be capped in the near term, and their March 2024 Nifty target stands at 20,500 based on 19 times FY25 earnings estimates. And that earnings estimate for FY25, according to Pankaj, is 1,062, which is implying about a 4% upside from where we are.
Okay, well, an interesting thing that happened yesterday was in the currency market. The rupee actually had a lot of strength. It ended about 13 paise higher at 82.04 to the dollar. And here's the expectation for today. Abhishek Goenka of IFA Global says that lower than expected US inflation prints have triggered a sell-off in the dollar. He says the July hike could well be the final hike by the Fed in this cycle. He says the dollar is therefore weakened and risk assets have rallied, as is typical in a setup like this. He adds the rupee has underperformed in a weak dollar environment, and he expects the dollar weakness and the rupee underperformance to continue. He expects the dollar INR to trade in a range of 81.60 to 82.90 over the medium term.
Okay, well, on bonds, Ajay Magnolia of JM Financial says the markets are expected to be mostly range-bound on the back of lower US inflation, boosting sentiment ahead of the Fed meeting. He says liquidity remains robust, but oil prices have edged a little higher, so he does not expect very much volatility. He adds STL auctions are expected to have firm bidding today. Ajay says with no domestic triggers, he is expecting the 10-year benchmark bond yield to trade between 7.05 to 7.1% today.
Well, we have a lot of stock-specific action to track for you. Get to that in just a bit from now. But for the time being, let's run you through the top 10 stocks that we're looking at. Infosys, HDFC Bank, Federal Bank, Sheela Foam, Amaru Raja Batteries, Zee Entertainment, Rail Vikas Nigam, and Texmaco Rail. Their stocks on positive news flow. While on the flip side, a couple of earnings reactions from the IT space. LTI, Mindtree, and Tata Elxsi could be reacting to a bit of a subdued set of numbers.